Kitco Mining's special coverage of the Precious Metal Summit is brought to you by Nucor Gold.
Mining is finally getting respect, but is that respect being translated into tangible support? I'm with Douglas Silver. He is the CEO of Balfour Holdings. He is one of 3 people to be inducted into both the US and Canadian Hall of Fames. And he is also author of The Rise of Royalty Companies. Douglas, welcome back to Kitco.
Nice to see you.
Douglas, mining has been a dirty word up until recently. What's changed?
I think what's changed is that with the EV revolution, the car manufacturers in particular need a lot more metal, and we don't have the mines providing it. So now you are seeing, for instance, the car companies investing and doing deals directly with mining companies. The reason that's important is that these companies have hundreds of thousands of employees. So if the employees are losing their jobs or can't produce the product because not enough metal, they're going to support mining because they're going to want the metal. So I'm hoping that that large number of non-mining people that need the metal will serve as a surge for the general public getting more favorably, leaning towards mining.
On the political side, I mean, it's been very odd because we've recently seen Biden, we've recently seen up in Canada, for instance, like a real embrace of mining. But do we see that coming though in tangible support? Do we see it actually happening in terms of like licensing? Do we see it happening in terms of financing or infrastructure that's being needed?
Well, I think in the case, I'm better equipped to answer this of the U.S. than some American, but people were shocked that a Democratic government would be investing directly in mining. Yet we've seen over $360 million come into either mining companies or into universities to studying how you can get the various critical minerals. And that's been shocking. We have, Thacker Pass currently has an application. They could be the largest award if the government produces it. But the government supported them. And even though there was opposition to Thacker Pass, the U.S. government said, no, we want this mine to go ahead. That's quite a sea change for the people in U.S. mining. Albemarle, the big lithium company, got $150 million from the Department of Energy. And these are grants, so they're not loans. They don't have to pay these back. They just got to invest it. Perpetua Resources also got $40 million. And we're seeing the federal government putting money in. And street talk is we're also seeing them streamline permits. In other words, people with frivolous lawsuits and stuff are being told to go away. There seems to be a lot more emphasis by the government. We need to permit these as opposed to we need to accommodate everybody who doesn't like mining. So I think it's been a big change. Again, in the U.S., people say, well, yeah, but the President Biden took the boundary waters off limits for PolyMet, to build that mine. Well, yeah, that's a big recreational area, big, area where people go for the summer. And they did the same thing with the Grand Canyon. Well, that's a big national historic site. But at the same time, they're putting money in supporting Thacker Pass, which is a lithium mine in Nevada. So it's a balanced approach to, a good government is one that offends everybody and supports everybody. But in mining, I think that the current government really needs to get credit for stepping up the plate and trying to make a difference.
It's been really interesting following the critical mineral space because we have seen the automakers go in, and then we saw the announcement of the major automaker that was funding Thacker Pass and Lithium Americas, for instance, and some of the other people that have had to make offtakes as well too. Never mind, you have the large Asian conglomerates that are doing deals with mining as well.
Yeah, so I just happen to have the stats from a presentation. But let me just run down through some numbers to show people how impressive it is. General Motors did a $650 million investment in the Thacker Pass, and they also did a deal on the Hell's Kitchen lithium project, but I don't have the numbers. Ford put money into Nemaska Lithium, which is a Canadian operation. Tesla's put money into Talon Metals. Ford has put money into Albemarle, which is one of the largest lithium producers in the world. And then Stellantis has done 5 different investments in lithium and rare earth and in copper projects. So we don't normally see the original equipment manufacturers, the OEMs, we don't see them in the mining space, and here they are. So this is good. They're trying directly to get to supplies as opposed to using middlemen.
It must be interesting in terms of those automakers actually hitting miners for the first time and seeing that this is just not a tap that you can actually turn on. There's going to be a long lead time for actually being able to kind of to develop these mines. And so they're also like what they've actually been happening with the chips. They've also with mines, they've actually have been developing more of these partnerships so they can understand what mining is, and then they can also get they can also have a security of supply that happened to. But mining really is a different kettle of fish, isn't that correct, in terms of like the time it takes to develop these things?
Yeah, it does, and the OEMs are going to discover it. But if you look at the list of the projects they're all currently investing in, they're all near-term production, next couple of years sort of thing. You don't see any of these companies putting money, for instance, into an exploration project. They're ones that have engineering. They have enough science ahead of them that they can get comfortable that they will see the supply in the near term. And also remember, these same companies are also ramping up their production. So they don't necessarily need it all today, but they need it within 3 or 5 years. So they've synchronized their needs with how these mines, in theory, will develop.
Now, Doug, you have a long career in mining. You recall that we had this ramp up before back in early last decade, and that was a concern over rare earths. And then we saw China had so much of the market that has actually been tied up. The one thing I just don't understand about what has happened with critical minerals is this actual strategic, the word that is always used in terms of bringing this supply home. Is it actually sustainable? It seems like, with China, this would be something that would be the classic. It would be, critical mass. It would be something that, if you look at, for instance, what has happened with nickel prices and how they're falling right now because of all of the work that is happening in Indonesia.
Right.
We saw at the same time is that we were worried about rare earths, which really shot up at the beginning of the last decade, but then actually collapsed because nobody could actually keep competitive with what is happening with the Chinese. Is this current is the government structures, the sentiment, is it actually going to be sustainable, or is it just going to be falling away because of the prices that the Chinese are going to be able to deliver to the markets?
The U.S. government did a study last year, and they declared that we need 30 more lithium mines by 2030. Yeah. I don't think there's 30 lithium mines in the world right now, and given how long everything takes to permit, there's no way there's going to be 30. So what's happening is the governments, and I would think Canada and some of the other countries would be the same thing, they're acknowledging there's a massive supply shortage. They're trying to figure out ways to accelerate it, whether it's to expedite permitting or provide loans to build mines so you can get the capital faster. But what I think they either know and they don't talk about, or they don't know, is that all these companies are ramping up. The supply picture is going to get even worse. And, when supply and demand go out of whack, that's when commodity prices go up. And I think the governments are making a first step, but they're going to have to do a lot more if they actually want to achieve their objectives.
I want to change tack. I think we should do, because we're at the Precious Metal Summit here at Beaver Creek. And I just want to talk about gold and silver right now. Tom Palmer, the CFO of Newmont, made this point years ago just regarding gold miners versus tech. He was saying that the sector needs a lot more consolidation. If you look at the tech side, you would have a couple of giants. You would have Apple. You would have Google, for instance. But we seem to have in this sector, you have a lot of mid-tiers, and you have the seniors, but nobody seems to have a large market share of the whole gold market. What's the dynamics that kind of keep the gold market that way as opposed to tech or other sectors?
Well, you need to separate out, the producers from the non-producers. In terms of the exploration companies, there's going to be a major winnowing because there's no capital coming into the exploration sector. So rather than having mergers, you're going to have companies just die on the vine. With respect to the big companies, you have to realize that, they produce gold all over the world. Mm-hmm. So does he mean there has to be one or two super big Australian gold producers or super big Chinese gold producers? We already have that. Mm-hmm. I think that consolidation will occur, but mergers and acquisitions tend never to occur at the bottom of the market. They tend to occur at the top of the market. And the reason is because then you can raise the money to finance the acquisition or the merger. Mm-hmm. So if we don't have a rising gold market and a bunch of money flowing in, there's no money to pay for these things. So it doesn't surprise me. And actually, if you look at portfolio theory, or you don't really want one or two gigantic companies, although Newmont and Barrick pretty much fill that slot right now. You want to have a bunch of companies. And then it goes to the economics. Do you want to merge with a company that's a higher cost producer than you? No. They may want to merge with you because you'll lower their overall. But I think the dynamics are much more complicated, and Tom would know this, but I think they're much more. But I see it the other way around. I see that we have too many companies all the way around. The capital markets can't support the large population. So whether you do mergers, acquisitions, or just companies leaving the business, maybe they'll go back to Bitcoin or cannabis, or whether they just die on the vine, I think you're going to see that as the way of shrinking down the business.
Why aren't people investing in juniors right now? I mean, we have 1,900 gold right now. I mean, that's a pretty good gold price.
Yeah, it seems counterintuitive. And at this show, I've been asking all of the companies I've been talking to. A couple interesting things I've learned. One is because of the elevated interest rates, money that would normally be set aside for discretionary spending, like on exploration, is now being preserved to pay the interest payments on these higher debt packages. So you're competing. Second is the industry is always secular. You have cyclical. You'll have people coming in and out of it. And I am sorry to say it, but I think the third is that the companies, especially the big boys, haven't performed. You have rising metal prices, and they're not putting out killing profits. So where's the incentive for the investors to come in? So again, there's multiple factors, and unfortunately, they all seem to be converging at the same time. But it's been a horrible year for companies to raise money because of these factors.
Lastly, Douglas, you wrote The Rise of Royalty Companies. Why'd you write it, and what were the findings?
So the purpose of one is, I built International Royalty Corp. So I was in the first generation of company builders. And I realized that all of the founders of the big companies are all retired now, but they're still alive. So it was an opportunity to capture their stories. And I ended up getting 11 of the largest companies to write their stories. And I had things like, what we're thinking at the time, what was going on in the markets, to give the reader an understanding about why they built these companies. And then I asked them to give me a couple good stories and bad stories about lessons along the way. Meanwhile, I analyzed all 2,000 of their assets to show people like what the average net smelter return is and stuff like that. And they all did a wonderful job contributing. If you read the book, the chapters are very much in the personalities of the people, if you know them. I mean, Pierre Lassonde addresses things quite differently from, say, David Hartwell. And so that was the purpose, was to capture the first generation of royalty company builders while they were still around.
Douglas, always a pleasure.
Mike, great to see you.
My name is Michael McRae for Kitco Mining here at the Precious Metals Summit. Subscribe to see more of our coverage from Beaver Creek, Colorado.
Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Nucor Gold.